today we put the spotlight on Dr. Reddy's. The stock has witnessed gains of 19% over the last year, which is okay, but it has underperformed the pharma index. Now, what has led to this underperformance, and can it reverse? Varsha has a detailed report on Dr. Reddy's. Varsha, good morning.
Good morning, Neeraj. Before talking about the underperformance, let's see what Dr. Reddy has been doing in the last 1 week. So stock is up almost 7% in the last 1 week. Let's see what is actually working for the company. What are the risks? Let's deep dive. So Dr. Reddy is actually focusing on wellness and differentiated products. So basically they are trying to shift their business mix, and let's see what are the JVs that the company has done which is actually working for them. So they've done JV with Nestle for exclusive OTC, that is over to counter products, wellness products also, and also they've partnered with collaborated with Sanofi and Novartis for distribution deals of EPS accretive or the earnings accretive business for the same. Let's see what are the key growth drivers which is actually working for the company. One is this semaglutide in Canada launch, which is a high opportunity in the short term. Now this is nothing but the obesity drug which is the buzz among the pharmaceutical companies. So this is one of the product that Dr. Reddy is actually bullish on, which is growing at a double-digit CAGR growth. Then company is also expanding its CRDMO, that is venturing into a CDMO business which is growing in double digits. So via Orgerine Services, which is a subsidiary of Dr. Service, which deals in CDMO. The other big thing that Dr. Reddy is being doing is entering into biosimilars. So biosimilar strategy is actually targeting global market worth $270 billion. So this is the other big thing that Dr. Reddy is actually working on. Now for all these products or for all these growth drivers, let's see what Capex plans a company has. So the Capex for the company is will increase to 2,500 crore for FY 25-26, which is double of the historical average that the company has been doing it. Now this Capex will actually support growth and the capacity increase in API manufacturing and also the new product launches that we have seen in the previous slides. Now, but despite all of this, why the company share price actually didn't perform? So stock was up 19.5% in the last 1 year versus, if you see pharma index, it was up almost 38% in the last 1 year. Let's see what are the concerns or why stock did not perform well. One is concerns about decline in the Revlimid contribution post FY26. Revlimid is a cancer drug which is actually working well for Dr. Reddy's, but post FY26 company's EPS will actually go down, which we'll see in the valuation going ahead. Rising overheads, the increase in R&D cost and your selling and distribution expenses is actually impacting margins for the company with respect to peers. Now talking about, so this all the reasons that why the stock performance has not done good. Let's talk about the risk that company has been facing. So limited pipeline visibility over the next few years, and also the products that they are venturing into are low margin, not that high margin products. The revenue per product has actually declined over the last few years. Price erosion in US, delays in approvals are some of the key risks that the company will be facing. Now, the most important thing for the investors is the valuation. Let's see how the valuation of this company is being impacted. So if you see, compared to its peers, so Dr. Reddy is actually basis FY27 is available at a PE of around 21 versus if you see their competitors is Sun Pharma is available at 28 PE while Lupin at 22. So Dr. Reddy is actually at a discount over its peers. Now there's a reason for that because of the Revlimid contribution which will decrease in FY27. This is the reason the EPS for Dr. Reddy's has been decreased to 64. So in all, if I were to conclude about the valuation, so compared to its peers, Dr. Reddy is actually present at a discount.